Recently, RBI announced to keep the repo rate unchanged. But what does it mean and how does it affect the stock market? Let's see. First of all, let's see what repo rate means. Repo rate is a rate at which the common banks borrow money from the RBI. If repo rate increases, that means these banks have to pay more interest to the RBI in order to repay their debt. Indirectly, what that means is that these banks will charge higher interest rates on the loans that they give out to the common people or the companies. Indirectly, if repo rate increases, the loans that you take from banks becomes more expensive. But how does it affect stock market and which companies do these affect? Let's see. The repo rate directly or indirectly affects the banking sector and those companies which have a huge amount of debt on their balance sheet. For example, banking sector, why does it affect? Now, if repo rate increases, that means people have to pay more. If repo rate increases, the banks have to pay more interest on the debt. That means their profit will decrease. That means their stocks will go down. Similarly, all those companies which have higher debt on their balance sheet, that means they have to pay higher amount of interest on the loans they have taken from the banks, which means lower profit, which means stocks going down. So you can keep a track on the RBI announcement and have a track on the repo rate changes, and you can trade in the stock market. Do follow and do like